Well, I was curious about one of your recent macro observations where you said that the bull market could continue into 2022. What are the signs that you saw that indicate that?
Yeah, it's so one of the ways in which I measure demand and supply, and ultimately a lot of the things I do on chain is grappling with like what is the real demand and supply between investors. Like there's a ratio you can run between, it's really simple. I call it supply shock. It's how many coins can't you get if you want to buy versus the coins that you can get. So, as the amount of coins grow that in the supply that aren't selling, I'm not selling, versus the people that are super speculative and they'll sell it at any price if they think the price is going to go down. So you run that ratio, and there's many ways you can like go who's not selling versus selling, right? There's many views into that lens. And one of the lenses that Glassnode use, which is the provider of data I use mostly, they look at who are long-term holders based on their coins not moving for 5 months. So anyone who's held their coins for more than 5 months, those coins aren't moving. They haven't moved in 5 months. They're probably not going to move. You're not probably going to be able to buy those coins. Whereas any coin that's been circulating within the shorter time frame, there's a fair chance you can get those coins because they'll be moving between hands, And so you run that ratio, and because it's a very long term, it takes 155 days for a coin to age into from short term to long term. It's a very smooth graph, and it's very macro. It's very sure, right? It's very like once a coin's reached 5 months of age, it's unlikely to change its behavior in a volatile way. And so when you run supply shock on that, you'll see the demand, essentially supply shock going up to these peaks, and those peaks coincide with mass accumulation by these long-term investors, and they also coincide with all the historical bottoms where a floor was put on the price by long-term investors because they keep accumulating, and anyone who's selling, they buy, and it keeps the price at the bottom. And eventually, once it dries out, no one's selling, the selling's exhausted, price moves up. And so we were in one of these accumulations. The last one ended at October last year. We had a decent spell of many months where we're at peak accumulation by these long-term holders. And then the price started to run up, and it started running up. And then those long-term holders started to divest and sell their coins out. And that actually has led, culminated with the price dropping down to our $30,000 range from the 60 to even 64,000. And then since then, the same pattern's happening, that they're accumulating, but we're not actually at peak accumulation. And it takes, you can gauge the time, you kind of gauge the time in which this happens. And I'm like, it looks like we've got another at least a month or two to get to fully accumulating based on historically, it takes this amount of time. And then after that, with high probability, you can say, well, once they're accumulated, then the prices can run up because all the coins are taken off the market. And then it takes months for that to run up, right? And so like you work out the time frames, it's like, man, we're going to blow past this year and we're going to keep running up. And like every bull market in the history of Bitcoin tends to peter out around the Christmas time of the year following the halvening, which we had. So the schedule really is for this bull market to peter out around December onwards. And currently the on-chain data is saying otherwise. And again, it's really difficult to mess with the fundamental data. Like people were wondering what what is the top for Bitcoin? When will it happen? And I just said at the start of this year, I do not know. I can only look for the 3 months ahead, maybe 6 months if I'm lucky. And now that we're approaching our fourth quarter, the data looks quite different from any other cycle we've seen before. And people keep thinking that we'll, template this bull bear cycle to past ones. And if you look on chain structurally, everything looks different. And actually every cycle was structurally different as well. So yeah, I think it's a fair chance that we'll not go into what we think, which is a traditional, Bitcoin bear market, which generally is a huge retrace of maybe 80% of its value. And it also takes about 9 months to a year to shake out. I don't think that's going to happen. And I think now, judging from the maturity of this market and the impacts of the different parts of the demand and supply from different parts of the ecosystem, we're breaking out of this 4-year cycle, which was really contingent on, the network being programmed to have its kind of newly mined coins every 4 years. Like that drop in the new coins being dumped onto the market is now quite insignificant. And I think that taking that all into account and what I'm seeing on chain, I don't think we're going to have like what we see these normal 4-year cycles again. I think I'm calling this the last cycle, and people think that's very somber and bearish, but no, I mean, like, this thing does a drunk walk of ups and downs, trending upwards as it finds its adoption for indefinite amounts of time. These 4-year cycles are gone. That's what I think might be happening, which is, I think, it's a big revelation, because that's against the expectation of what the majority think. So we'll see if that plays out.
Well, so what does that mean for the price? Because I've seen videos where before you were predicting like 300,000 to 400,000 per coin by December 2021. I think then you corrected it to 200,000. So now what's your prediction?
Well, I don't actually make predictions. Everyone says I'm predicting this and that. All I'm doing is reading the value of a particular model that I have that continually tracks the price over its entire history.
Yeah.
And that model gives you an upper bound of where price can go. And every past top of a bull market has hit that upper bound and dropped. So if you assume that we get a top of the market in a cycle, it was like between 300 and 400,000 was the projected upper band for December, and that keeps changing because as we get closer, we get more price information. And now it's like, I haven't looked recently, but I think it's around 200,000 is where it might be the upper bound. But if you take into the context of this other on-chain data we have, it means that we're not going to have a market top, like a traditional cyclic market top, where everything goes into a mania phase and everything runs up, and then we have a blow off top and we come back down. We have this drunken walk. It's like the S&P 500. It just keeps wandering upwards.
Yeah.
So it can be in the midline. And so the price could be anything between two models that I have, if they hold. Models are models, they sometimes break. So the upper bound is like 200,000 plus, right? And then there's lower bound, which is, I think it's below the current price by significant amounts.
Wow.
But like the answer to this is that it means that let's not look at the upper bound anymore. Like, we're looking at the wrong thing. Everyone asked that question because at the end of this year is the expectation that's the top of this bull market and the end of this bullish cycle. if you remove the idea that we're going to have an end of this bull market like all the other cycles, and we do this drunken wander, then this model doesn't really matter too much. And the idea of what is our price end of this year doesn't matter too much, because people basically want to know when are they going to sell their coins and go to cash and wait out another year till this thing bottoms. And it's just interesting. It just means maybe you shouldn't be selling. Maybe like we should be like equity investors who just invest and wait for this thing to keep going up without trying to time this market. You know, it's obviously worth timing the market if you're going to lose 80% of your value over the next year. But, you know, we've just seen a pullback of, you know, 50% pullback, and then it's recovered over 2 months. Like I can see a lot of these things happening, but that's not a bear market for Bitcoin. Mm-hmm. You know, the bear market for Bitcoin is 80% and 6 to 12 months. So,
what do you mean by last cycle? I mean, that sounds like so doomsday. What does that mean?
Yeah, I know. It's like, it's the last of the 4-year cycles. It's the last of this, like, if you look at the price chart over 12 years, we've had 3 prior cycles, and every one of those, it's done a huge run up, it's done a huge pullback, but retains most of its gain from the last cycle. And then it's done it again and again. You know, the last one we went from below 200 or like 150 was the bottom, and it went to $20,000, and then it pulled back from $20,000. Imagine investing $20,000 and then like you come back to at the end of the year and it's like $3,200. Like that was the last cycle. That was the previous cycle. And the ones before that was more carnage. And we waited like a year for that to you know, purge itself. And I'm just saying that kind of experience is likely to not happen again if what I'm seeing plays out. And we just, yeah, so if we were to look back in like 10, 20 years time and we look at the price chart of Bitcoin, we go, look, there's 3 cycles, whoop, down, and then on the 4th time, it doesn't do that pattern. And it becomes like this drunken wander of price discovery as it finds its fair value as Bitcoin, you know, spreads to 1 billion people or more, which is actually projected to do in the next 4 years.